The wealthy don't work for money. They actually make sure that they're making money while they sleep. They're scaling, they're building businesses. They're actually leveraging every opportunity that they have. They look at life a little differently than most people because every time they meet somebody, every time they're in a business meeting, everybody that they're communicating with are opportunities. Opportunities, for the new business plan or the business opportunity. They're always looking at ways to build and grow their wealth. They don't sit on their laurels. They don't just relax. Comfort is not in their DNA. And so one of the things that I want to make sure that people understand is that when we're talking about how money really works, one of the things you have to understand is how can I grow money even when I'm not involved directly? And I always use the term, make money while you sleep. Because whether it's real estate or stocks, bonds, mutual funds, or whatever you're in, any type of investment or any type of strategy or any business that you're involved with, how are you leveraging it? How is it producing and profiting you as an individual? And so the term make money while you sleep is, well, that's compounding. That means your money is actually growing. And that is what the wealthy do. And that is what I want to make sure that people understand. It's not their direct actions, it's their understanding of how money works. Therefore, they can make better decisions. That is the key. It's not necessarily a direct skill, but it is a knowledge, piece of understanding, knowledge of how money works. You've heard me talk about this before, but I'm going to dive a little bit more into it. It's not how much you make, it's how much you keep. Now, what does that really mean? Well, when we're talking about money, and you want to make sure that whatever you earn, you get to keep, or keep the majority of it, because the reality is it has to do with taxes. How did you earn it? How did you utilize it? How did you invest it? What did you do to compound it? When you understand the money components and how money grows and those types of specifics, that means there's a tax component, because money obviously is what the government uses to keep it running. So you get taxed, property tax, sales tax, your cars, registrations and everything, fees, it's all a tax, income tax. You have all the capital gains, you have all these different components. So what are you doing to ensure that you're leveraging the opportunity that you created for yourself? So I always refer to this as that it's not how much you make, it's how much you get to keep. So you can make $100,000, but if you only keep $60,000, well, then you only got $60,000 because you're paying $40,000 in taxes. If you make $100,000 and you get to keep 80, well, you've done something in your strategy to pay less taxes. It's not that you're avoiding paying your taxes, it's how you're leveraging it. What are you doing? It's decisions you're making. So keep that in the back of your mind. As you earn, what are you doing? How you're growing your money, how you're investing your money, the things that are important to you and your family. You really need to understand how money works, which brings me to the next topic, financial literacy. The number one topic right now in the world, because, and it's not just here in the United States, it's everywhere, financial literacy is missing. It's missing in our school systems. It's missing from parents to children. It's missing in every aspect. Everybody understands that there's a value to that paper dollar. There's a value to an asset. Because you can go spend it. You can sell this get money, and go spend it. But do you understand money? Do you understand how it grows? Do you understand the accounts that you put them in? Do you understand the tax components to everything that you earn, and where you're putting your money and those types of things? So financial literacy is so important, and there's so much to it, but it should be a topic that's discussed not as something that you keep close to your vest and don't share with your children or don't share with family and friends. It's just a discussion, because guess what? That's what the wealthy discuss. That's what the wealthy families discuss. They talk about estate planning, they talk about assets, they talk about growing wealth or building businesses and real estate investment and all the other things that go along with life about building wealth. So financial literacy is something that is so important. Matter of fact, next week I'm flying out to Colorado to do a financial literacy presentation to Adams State University. So it is starting to resonate across the education system, but it needs to be a deep dive to the entire population in the U.S. because the next generation really needs to understand. Because people say, well, it's the stock market. Well, what is the stock market? So these things have to be understood in order to improve your situation and improve the situation for the country. I mean, that really is a big deal. So, financial literacy is, like I said, this is the #1 topic in the United States right now. So, the next thing I want to talk about is understanding assets and liabilities. Now, people always look at, well, what is an asset? What is a liability? Okay, when you buy a house, oh, that's an asset. Well, not necessarily. It's when you purchased it, is it valued more than the amount you borrowed to purchase it? Is it able to compound and grow in equity so it maintains a value more than what you owe? That gap is what we refer to as equity. So that is something that brings value to the asset. But if you allow the home to depreciate through not taking care of it, other types of insurance issues as far as having a lot of claims against, faulty electrical or plumbing or roof or something like that, where it becomes less valuable, those are the things that you want to look at when you're talking about real estate and how the value of a home is maintained, in the eyes of an asset, So those are the things that, that people really need to understand when you're talking about assets. That's just one. The other ones can be stocks, bonds, mutual funds, any type of investment. Those are assets. Okay, they may go up and down with the markets, but they're still assets as long as there's value to it. So, well, when does assets become liabilities? Well, they become liabilities when the asset is no longer valued more than what is owed. That happened in 2008. When that value of the homes crashed, loans were really high, and the loan was more than and the payments were more than what the house was valued at. People walked away, and the banks got stuck with the homes. Though it became a liability. And so you see that a lot with cars, because they always talk about, oh, you buy a new car, drive it off the lot, it loses value because it depreciates. So those are things that we reference when we talk about assets and liabilities. Not everything's an asset. And so understanding the difference between assets and liabilities is so important as part of the money discussions and as far as how money is looked at, wealth building. Not every purchase is an asset. Okay, so I want to make sure I leave you with that as a topic that you really need to dive into, and you always ask yourself when you go to purchase something, is this going to be an asset, a liability? How do I make sure it's an asset? Is it going to appreciate and grow value to bring me, to have more wealth in my portfolio? or is it going to drain my resources and become a liability? So those are some questions you have to ask yourself when you invest. You know, the other thing that I want to leave with is pay yourself. What does it mean when you say pay yourself first? Okay, well, you always want to make sure, whether you're a wage, worker, or you're 1099, self-employed, or whatever however you earn your income, you want to make sure that you are actually looking at how, when you receive that income, are you able to cover your expenses? Do you have enough to invest? Are you have enough for your emergency fund? The things that are important to maintain your wealth and your growth in building wealth. But if you have to take your entire earnings and pay off debt to keep yourself afloat, you're not paying yourself, you're paying other people. So you're not getting ahead. So pay yourself. I want you to really dive into that and look at your situation and say, okay, am I paying myself? Am I earning and growing? Those are the things you want to ask yourself. Okay. The other thing is, when we work to earn, common, go to work 8 hours, you know you're going to get paid a salary for that day or that week or that month, but work to learn. That's going to separate you from those who just show up, do whatever they need to do, and then get a paycheck, okay, or get a commission or whatever it may be. Working to learn means you're growing, because you can never stop learning, because when you stop learning, you stop growing. You want to learn, not only your skill that you have and what you're being paid for, but you also want to learn what else is around you, okay? Like in real estate, yes, we help people purchase, and buy and sell homes, but when you have inspections, what are your inspectors looking at? Learn more about the process, learn more about the home, learn more about the construction build of the house, learn more about all the little intricacies that it goes into being an expert in real estate. Okay, in money, learn more about how money grows, how money is taxed, how money compounds, what each account does. Really dive into those things, because that really allows you to separate yourself as a expert versus just a novice person that says, well, if you fill out this paper, you will earn this and I get a commission. Okay, that's you're not an expert. You're just processing paper. So these are the things that I encourage people to do is, learn, not just earn. Okay, so that's something that I think everybody should do in whatever profession you're in. Okay, and then the other last thing I want to leave you with is overcome fear of losing money. What really keeps people from building wealth is fear of the unknown, fear of what's going to happen if I take this $100 and I put it in this account. What's going to happen? Am I going to lose it? Well, in some cases, yeah, there's a chance you will lose it, but there's also a chance that it will grow. You're going to have to take a chance. That's how you build wealth. Just like when you buy a house, is that house going to grow in appreciation? Well, we all like to think it will over time, but there may be bad years in the market, in the housing market, that it drops. Same with car market, same with every market. The stocks go up and down every day, and so, your company that you work with, one year has a great year, profits are high, and then one year it struggles and there's changes in the structure of the company. That happens, that's natural. But at least do not allow the fear to set in and stop you from growing your wealth, because then you're just putting money in the savings account. It's safe, but it's not growing. So that means you got to work even harder for it to compound, because it's not compounding by itself. Therefore, you're not making money while you sleep. So there's a lot that goes into building wealth. Okay, so those are the things I want to leave you with. And so again, money lessons, and how to build wealth is very important. So.